Welcome back to the podcast. Today we're taking a deep dive into the Perth property market. We're going to look at the latest numbers, what's driving demand, and provide some tips for buyers who are out there. Joining me today is Charlie. Charlie, welcome.
Thanks for having me.
Let's jump in and see where the Perth market is headed next. So, Charlie, give us a little bit of a quick snapshot and overview of the market.
Well, it's extremely hot at the moment, as we know. Record low numbers of properties listed. We're currently sitting around 2,900. As anyone who's aware, we probably need around 14,000 houses or properties on market to be at an equilibrium. And of those, 2,900 properties, we're probably sitting around 1,700 established. So real all-time record low number of stock. So it's making it really hard for clients to buy.
It is pretty wild stuff out there. And I guess with that low levels of stock that you've mentioned, can you just tell us a little bit about where prices are at the moment?
Well, yeah, obviously supply and demand, limited supply and high demand is causing prices to increase. And I think the last couple of weeks we've seen some pretty, what we would say are crazy prices, but it's actually the new norm now. There's a bit of desperation, FOMO kicking in, I think. And yeah, we're seeing, I think, averaging like 1.3% growth per month. And over the last 12 months, we've seen roughly around 14% growth, which is pretty wild to where we were this time 12 months ago. We thought we were kind of coming to the end of that, and it's just continued to grow at a rapid pace.
Yeah. And in terms of the median house price in Perth at the moment, where is it sitting?
44 by 2 is around the 850 mark. Units and apartments slightly less. I think units around that 550, 600k mark. But yeah, big increase from where we were 3 years ago.
Yeah, absolutely. And in terms of, I mean, we're probably going to keep referring to supply and demand in a hot market in today's episode. Time on market, how quickly are houses selling?
We're sitting around 14 days at the moment. So it's actually slightly up from last year. Last year we were sitting around the 8 or 9 day mark, which is 14 days is still ridiculously quick.
Yeah.
And that's taken into account there's a lot of properties on the market in that above $2 million space. Yeah, they're generally going to sit on market a bit longer. Yeah. I'd say anything in that 600 to 1.5 mil price range. It's if you ask an agent, it's selling within the first weekend. So we're probably looking at even less than 9 days on market.
Yeah, which is just crazy. The other thing, and this one statistic really blows my mind, probably more than any of them. Since 2020, can you give us a rough gauge on how much property prices have increased in Perth?
Well, I think it's about 60%, right?
Yeah, right.
Which is huge from the end of pandemic. So what, 2021?
Yeah.
So 4 years, 60% growth is wild.
Albeit it was probably prior to that we had quite a bit of a dip in the Perth market, but 60% in 5 years or under 5 years is just crazy.
Yeah, there's not too many places in Australia that would have done that or close to that, and even probably places around the world.
Yeah, absolutely. Now, obviously prices going the way that they have, then there's this key conversation around affordability, right? Now, what is the affordability like in terms of people's income in Perth? How has that changed in recent times?
Well, WA, we're heavily governed by like the mining sector. So there's a lot of fly out jobs, tradies on a lot of good money. So in terms of debt to income ratio, and that's in terms of average of people's wages going towards a mortgage, around that 45% mark. Okay. I think we kind of cap out around that kind of 63% mark in terms of that's when things come a little bit unbearable for people. We've seen over in Sydney, obviously house price has gone up. The house price goes up, generally the loan goes up, and then obviously cost of living crisis, etc. People got less surplus cash to spend. So we've still got another 10 to 15% growth there in terms of affordability. Yeah. I'd say majority of clients, if you agree, affording or servicing for a home loan isn't the issue at the moment. It comes back to that stock on market.
Yeah, absolutely. Now, before we mentioned the low levels of stock, there's only a few things that can really, or in fact, there's probably only one thing that can improve that, and that's houses being built. So a key sort of factor that we look at in general in the wider market is building approvals and commencements. What does that look like in the sort of last 12 months?
In the last 12 months, I think we've built about 17,000 houses, 17 to 23,000. But we need to be close to that 27, 28 mark, which is tough. It's not just builders who are probably under the pump and so trying to get homes up and built. I think build turnaround times have actually decreased, and builders have kind of got the hands back on. Probably looking at average build time, say 12 months. It's still having land kind of titled, being able to settle on the land and move that forward as quickly as possible.
Yeah, absolutely. I think it was about 18,000 homes built in the last year. And like you said, we're still a little bit behind that. It needs to be anywhere, I think you mentioned between 24 and 27,000. That's a lot of homes. And the reason for this requirement of additional homes we'll touch on in the next little bit. And that ultimately comes down to population growth. So can you kind of talk a little bit about that?
Well, I think, last year, I think we had about 70,000 people migrate to WA or Perth. Now, if we break that down, just to say one house per two people, that's 35,000 houses. So we're at deficit there. And that's not taking into account, population we have here, people move out of the home. We need to build more properties or more homes, whether that's apartments, units, new builds. It has to increase somehow, to keep up with the supply or demand. Sorry.
Yeah, I think the stat is that it's about 2.4% per year, population growth, which is pretty crazy stuff. And it's the highest in the country, from the statistics that are being released. So we've got population growth on one side of things. On the other side of things, is the investor market, right? So we've got people looking to buy their home. Which will come from the result of people moving into the state. They need somewhere to live, but we've also had activity from over east. Can you talk a little bit about over east investors?
Well, we've seen them kind of pull back from purchasing Perth. Reason being, a lot of them think that it's done its run, and Perth has done a massive run.
Yeah.
But we still think there's going to be a bit more to go. I say another 10-15% potentially in the next 12 to 18 months, maybe 2 years. But it's not going to do the run that it's had, that 60% growth over the last 4 years. A place like Melbourne is actually now cheaper to buy there instead of Perth, which is crazy. So we are seeing a lot of those East Coast investors kind of pull back from over here, even potentially sell, and then go back into the market over there in Melbourne or other parts of Australia.
Yeah, absolutely. And I think it was such an attractive proposition for East Coast investors a couple of years ago because of the price it was back then. If $500,000 median house price probably blew their mind. Whereas now that it's above that 800 mark, like we discussed before, it kind of makes sense for them to go back to cheaper markets. So I guess we'll see how that plays out over the next little period. So I guess we've kind of talked a little bit about the market. Now, finance and lending, which is obviously where we specialize in. Rates have come down a little bit over the last couple of months. How do you see that impacting buyer sentiment?
Again, it kind of just adds fuel to that fire with the price increase. With rates coming down, we've had 3 rate cuts this year. So it just allows people to borrow more money.
Yeah.
So essentially, if you and your partner, you were purchasing $1 million in February this year, and you're both on kind of steady incomes, 100K each, no debt, you've had 3 rate cuts, it's potentially another $80,000 that you can now lend.
Yeah.
So if you can now go from a $1 million cap out to $1.80 million or 1.1, you can now offer that, and we're just seeing house prices increase in that way. And also, we've had changes to HEX debt with some lenders.
Yep.
Some lenders are, if you're under a certain amount, they'll waive that, or if it's going to be paid out in the next 12 months, they won't consider that as a debt. Again, boosting people's borrowing capacities, and a few other changes as well.
So rates is obviously one key thing, and then the other thing is government or policy changes, which may drive prices or the market in general. Is there anything coming up that's interesting?
Yeah, 1st of October, first home buyer scheme, big change to that. Originally on that scheme, if you're a single applicant, if you earn over $125,000, you weren't eligible. As joint applicants, it was an income cap of 200. They've now waived that cap. So no cap on income, you can earn whatever. So for instance, you can go up north and earn 250, 300k a year as a single applicant. You're in the scheme, you're fine. And then also they've increased the price cap from a 600 purchase to 850. So
And that's just in Perth specifically?
just in Perth,
Yep.
just in WA.
Mhm.
Each state got different caps and different limits on how much you can purchase for. But we're seeing here in WA, we're expecting that anything kind of sitting in that 600, 650 mark is going to increase now, because now there's a lot more not players in the game. We've had clients, in that mainly in that FIFO space. It's quite common. I'm a single applicant. I'm earning 150 to or plus each year. I've got a 5 or 10% savings. Before 3-4 weeks ago, I was paying LMI. My rate was a lot higher. Now I'm not paying any LMI. My rate is now a 20% rate, so it's at 5.5%. I've only got to put 5% deposit down. So now they're in the game.
It's going to open up a lot of options for people, isn't it? Which is, depending on who you talk to, the scheme is obviously very helpful for first home buyers, who are probably the ones that are struggling the most with property prices, but it's potentially just going to make things a little bit out of reach for more people. But I guess we'll just have to watch the space with how that plays out. Now, you touched on it before as to a bit of an idea as to what you think the market's going to do in the next little period. Next 12, 18, 24 months, what do we see happening?
I think that's
no crystal ball, obviously. No
crystal ball here, so I don't want to be held for this. But I think the run from now to Christmas is going to be really tough. I think we need a little bit of a break somewhere to allow some stock to come to market and kind of help in that sense. In terms of price growth, a lot of experts coming out saying another 10% in the next 12 months, 10 to 14%. That's when I feel like things will potentially call off or hit that affordability where people can't afford to lend more, and then we'll have the kind of prices steady. In terms of prices and overall value of properties, I can't see it coming back at all at the moment. The market's too hot. Week on week, we're seeing house prices increase. We had one today. Wow, $1 million in that suburb. If you said that to me 4 or 5 months ago, we probably would have gone, that's way too much. Now it's becoming a bit of a norm. So I can't see prices coming back. But only probably another 10% to be conservative.
I guess there's a little bit of a silver lining for our buyers out there that are watching. This time of year, spring, is typically the time of year that the market, a bit more stock comes to market, right? So hopefully, people can hold out a little bit more hope that there's stuff coming on, because at the moment, like you said earlier, there's just nothing available. So, fingers crossed for that. In terms of you're probably competing against. We had a conversation about this before. Someone 15 offers this morning, which is actually not even that much in the current times. How can someone make their offer as strong as possible?
I think first of all, speak to your broker. They can help your offer kind of stand out or as strong as possible. There's going to be terms for the seller. The first thing I'd be doing is speaking to the agent and asking what's the seller's position. Does the seller need a quick settlement or a quick turnaround? Do they potentially need to? The seller might have bought something, the settlement's not for another 5-6 months, might not be till next year. Can we offer a rent back, or can we settle and rent the property to them and they can stay there? Especially if you're at home as a first home buyer, there's no rush to move out. If you can secure the property and potentially just lease it back to the seller, it kind of gives them that flexibility, and that could be the difference between us two going in for the same house, offering the 850,000 in the scheme, we're capped out, and then they go, you know what, Vish is offering a lease back, or Vish can settle in 14 days after finance approval. That can get you across the line.
Yeah, absolutely. Now, in terms of people that own a current home and then looking to upgrade to their dream property or whatever it is that you want to call it, if it's really a struggle out there because of the stock level or affordability or whatever the case is, do they have any other alternatives?
Definitely. We're seeing a lot more clients now should have built up equity. Even if you purchased in the last 12 months, you'll have some equity in your property. And we're going, cool. Are you happy where you are in terms of location? Are you in school zones you want to be in? Yes. It's tough, as we know, to move. Can we cash out some equity and potentially do some structural or non-structural renovations to the property and kind of help turn that property into the place of your dreams, or instead of having to go buy? Because as we know, transacting on property is expensive to have an agent come in and sell, and then to obviously pay stamp duty again on your new place. That's what we're seeing a lot more clients do. They go, yeah, Charlie, Vish, it's tough out there to go find something. You know, how much equity have we got? Cool. I'm going to cash out 200K. I'm going to add a bathroom. I'm going to do the kitchen up, and then maybe do a couple of things around the house and landscaping. And I'm going to kind of sit here now for next couple of years.
Yeah, absolutely. So that's the owner occupiers. What about the investors? Obviously, the market's still looking like it's increasing, and it's going to increase for a while. There's still some opportunity there for investors as well. Would you say?
Definitely. Again, has to align with your strategy, and then I would be looking at make sure that you can kind of look in what are you looking for in terms of property. Are you looking for something for cash flow, capital growth? As we know, we've had massive capital growth over the last 4 years, so you may not be getting much out of that tap if you turn it on. But again, I would definitely then be speaking to your broker, how much you can afford to borrow, what you're comfortable with, and potentially then obviously engaging with a buyer's agent or property management team to help you with that strategy to make sure you're making the best decision possible.
Awesome. Now, Charlie, we're just out of time, and we've covered some good topics here. If you had one piece of advice that you could give to someone who's looking to buy right now, what would it be?
We've got 3.
Okay.
So
We'll allow it.
So first one, be patient. I know we've both purchased properties, not in this market, but we see clients week on week. It's an emotional kind of roller coaster you go through. You see a property listed on a Wednesday, you go view it. There's 50, 60 people there. You put your offer in, it's not accepted. You're back on the roller coaster. So be patient. Stock's going to come to market. You will find a property, and just be calm. Don't buy because you feel like you have to buy right now. Second point would be engaging with a buyer's agent. We have a few that we work with and we can recommend. We've seen a lot of properties now transact off market. So a buyer's agent can help you with that. And lastly, it would be prepared to pay what the property's worth. There's going to be no low ball offers accepted. You've got to be realistic. If you're not prepared to pay, you can't be upset if your offer's not accepted.
Perfect. Beautiful. That's all we have time for. Thanks to everyone for watching.